Hello and welcome to the Kiwi Advisor Network podcast. I'm the host, Warwick Slow, and today's guest is Malcolm Knight from Advice Knight. Malcolm's a very experienced advisor. He started Advice Knight a few years ago and it's going from strength to strength. He's also arguably one of our more experienced advisors behind a microphone because he's a regular on some of New Zealand's biggest radio stations, including News Talk ZB and George FM. He's been ranked as a top 25 advisor in the country in the mortgage space, and it's really exciting to see where his journey is going to go next. I think you'll really enjoy this. The podcast also counts towards your CBD hours, so make sure you log them in. And if you enjoy this and you get value from it, please share it with another advisor who you think would get some value. It helps us grow the more listeners we have. You can listen to this as well on Apple Podcasts or Spotify or wherever you get your podcasts from, as if you are watching this on YouTube. So sit back, relax, enjoy the podcast. Malcolm Knight, thanks for joining us today.
Thanks for having me, Warwick.
Of all the guests we've had, I feel like you're probably like the most versed in terms of media training. I feel like every time I flick on the radio, you're on there talking about something.
I can't say I've had a whole lot of training, but I did think I had the face for radio, so it seemed like a logical progression for my business.
And how we normally start is we just find out a bit about your history and how you got into the industry. I understand you kind of like started and kind of paid your dues at the bank. And then how did you follow on from that to starting your own business?
Yeah, definitely did the old bank track, and it was kind of just your typical very naive university student. You know, you feel that you should go to university and do some degrees, and then you kind of finish with no idea how the world works and what you should be doing. So I actually had a couple of really good part-time jobs whilst I was at university, and finished with a couple of degrees, and thought, I'll just keep doing these for a while, but Mum was definitely in my ear saying, you're wasting your degrees, go and get a proper job. What are you doing? And so I thought, right, let's do this. And it was back in the old days where they used to print the Herald, and you open the Herald, big ad jumping out, graduate opportunities in banking. I was like, right, that sounds like me. I just read Cain and Abel by Jeffrey Archer, which certainly glamorized banking and made it sound like a particularly sexy profession. So I thought, right, I'm going to be a banker. Let's do this. The ad was from Robert Walters, so I put my CV together and submitted it. And they called back basically straight away and said, hey, thanks for sending that through. We'd love to interview you. Could you come through tomorrow? I was like, right, better go and buy a suit and learn how to tie a tie and all of that kind of fancy stuff as a 21-year-old. Doesn't necessarily know how to do outside of school balls. And so went along, had the interview at Robert Walters, and thought everything went excellent. Was so happy with how that went. This sounds great. This is my gig. A couple of days later, they rang up and say, hey, thanks so much for coming in. You interviewed really well. We really liked how you came across, and we'd love to send your information through to the bank. My response was, you're not a bank? No, we're a recruitment company. I was like, oh, but I was really looking forward to working with you. So it just really shows, how little understanding of the world you have. I thought Robert Walters was some kind of cool boutique bank, and they seemed like nice people, and I was just upset that I wasn't going to have the pleasure of working with them.
Damn. I'm surprised because recruiters, I know that having had friends and gone through that process before, sometimes they're like, hey, do you want to come work for us? So
yeah.
Might have roped you in at a different time.
Yes, I'm sure they saw my lack of experience, and world naivety has not been a particular asset to their organisation, so screen me out.
He did think we were a bank, yeah.
So they sent the information through to ANZ, had my interview with ANZ. The role was actually a mortgage broker underwriter. The role was assessing loans submitted by mortgage brokers, working out whether we'd lend, your typical loan assessor role. So that was me at 21. A really, really good place to learn lending, I guess, because you're seeing a lot of transactions. You're looking at pay slips and bank statements and seeing scenarios, and really interesting because you're exposed to multiple scenarios and transactions. So learn a lot, good steep learning curve, and really gave me a thirst for property and really seeing how many of the customers are getting ahead through investment property and building equity. It kind of picked my interest to getting into property young and really encouraged me to buy my first house at a young age.
Great. Yeah, a lot of people don't. I mean, I did the whole traveling thing, went overseas. There's that little part of me that feels like, damn, if I just stayed and bought a property instead of going overseas, you might have been in a better position. But your journey, so I think there's no better way for an advisor to do their first deal than actually buying a house themselves. It gives you so much more empathy and time with the clients. Do you still you feel like you're imparting some of that wisdom and experience when you speak with first home buyers? Do you still kind of like run through that journey with them?
Definitely, and have worked with advisors before that haven't purchased a house, and you do see some of the pitfalls just in the knowledge, because whilst they can learn the transaction side and work out how to approve a deal, and then it kind of goes into a black hole, and what happens next when the clients are asking what's the process of the solicitor, unless you've been through it. You don't really know what's going on. So definitely recommend any advisors that haven't bought a house to try that process. That does put you in good stead to provide and impart that knowledge with clients, definitely.
And so you got to the bank. Did you work your way up to being like a mobile mortgage manager at ANZ, or was it?
I never did the mobile mortgage manager route. I did flirt with it a couple of times, and there's a couple of good region managers within the bank that did suggest that path. But I don't know, it's kind of funny how you get into an organisation like a big bank like that as a young person, and I think they're quite good at selling the dream of working your way up the pyramid. So I probably aspired more for more management roles. I only did that role as an underwriter for about 12 months before going into a credit manager role, so a more senior role working on the wholesale mortgage side, and then went into our high-risk mortgages division. This was pre-global financial crisis, the glory days of banking. So I took a role up with Nationwide Home Loans, which was our high-risk division, where we'd actually assess deals that were declined by either ANZ Bank or National Bank, and we'd risk price them. So we'd look at a transaction and we'd say, hey, you're not quite a prime customer, but we'll call you emerging prime, which not subprime, just emerging prime. So you've got the capacity to become a prime customer within a 3-year period, was the loose definition. So instead of giving clients interest rates of, say, 7% at the time, we'd say, hey, we'll do that at 8.5% to cover the risk. We'll sit it in the specialised unit, which was Nationwide Home Loans, manage it really closely, day one collection, etc. And then the goal was to get them back to either ANZ Bank or National Bank within that 3-year period. So it's quite a good induction again to the more outside of banking kind of policy. And things were fairly loose back then pre-GFC. We were doing a bit of low doc 90, and we did have a no doc product, which was even better.
What?
Yeah, so no doc was where you didn't need to declare what your income was. You'd simply just sign a declaration of affordability, which would simply say that I can afford the lending and it won't place me in any financial hardship. Signed, Mr. Customer.
Wow.
And as long as it was standard residential, the 20% deposit, we were good to deal. How the world changed.
Oh my God. When you said glory days of banking, did you know at the time that was a bit weird?
Not really, because you weren't really quite as seasoned. I had a bit more hair and none of it was grey. And so, you hadn't quite been through those cycles. So it was a bit of a look and learn. And the sun was really shining at the time. You had this really big bull run. The lending appetites were quite aggressive. And when we set up, we weren't doing quite as stretchy transactions. But the reality is all of the banks started following that way. So both ANZ and National Bank's lending policies started becoming more and more aggressive, which would push us to have to go further to actually have a market. And, it was, 2007, 2008. So, they were really starting to push for stretchier deals. And it seemed like the norm at the time. And we had ANZ in Australia really looking upon us favourably, going, wow, this model is working so well. Look at the revenue it's generating. It's starting to convert a wider range of deals, because you think from a bank's perspective, you're receiving a deal, you're doing all the work and assessing it, and you're saying no, and then that deal's going to a finance company or a competitor. So why not, us keep that in-house and say, we've already done a lot of this work. Let's just have a look at it and say, well, it's not standard criteria. We'll charge the premium for that additional risk. We will sit it on our book, but we'll manage it more closely. If a payment's missed, we'll be straight on the phone, day one collection, and aim to get them back into being that prime customer. So you're saying yes to more transactions coming in the door, so you've got a higher conversion rate, you're getting higher revenue, you're charging fees. We used to really lump the fees on it. So the revenue was fantastic, but obviously it's the requirement of that model succeeding is having a market where property prices are going up. When that music stops, then it's a completely different ballgame.
Yeah, how was it during the GFC in 2008?
So suddenly stuff started unraveling in America, and the word really quickly came down saying, mothball this business unit effectively, close the gates. We don't want to be seen to be in any of the emerging prime or subprime space, because that will impact our cost of capital. It's just not a good look. So we quite quickly turned off the tap. I was in a lucky position being on the ANZ talent radar, where I was able to quite quickly switch to different business units, and effectively I pulled the ripcord and moved to quite a different area of the bank. The unit, I mean, the write-offs weren't significant at all because, there was still really good rigor. It was all, residentially backed. We didn't go through a cycle of a whole lot of mortgagee sales as a country. But, we probably learned a lot. It's just very much a timing thing, but really good, again, induction to see a different side of lending. And the role I had there was to go and sell it. So in that role, I'd go out and I'd train the branches, the mobile mortgage managers, the mortgage brokers. There wasn't a whole lot of scrutiny on expenditure. So, you could have those real good cool programs where you'd fly down to Dunedin, drive down Invercargill into Queenstown, have the weekend in Queenstown, presenting and drinking with brokers and not worrying about your expense card. After GFC, you really had to justify every single coffee you bought. So, yeah, I remember we used to have a most expensive employee travel thing in the bank. Every month would come out and list who'd spent the most on travel, and it wasn't something that was frowned upon at the time when you were at the top of the list. So again, just how different and our budgets were pre-GFC.
Wow. It seems like the Wild West.
Yeah, it was
in comparison to where we're at today.
Yeah.
And so at what point did you transition from being at the bank to becoming an advisor?
So I did a decade tenure within the bank, and again went from those roles to quite different ones, and ended up in the bank. My final role as a commercial manager looking after property construction finance. I only had about 12 clients that collectively owed about $220 million. So that was all big grunty kind of apartment developments, building hotels, big subdivisions, etc. So quite a different role. I just felt the bank started to get a bit meaner in terms of remuneration. And, doing a few years without getting pay rises because, everything was on austerity, we're trying to cut costs. And you're kind of going, my revenue that I'm bringing into the bank is increasing quite rapidly, but the bank's not prepared to track my salary with inflation. Started to get a bit frustrating. So after 10 years, I just pulled the ripcord and said, I've had enough. So, wrote an email and gave my 4 weeks notice. Got called into the general manager's office saying, you must be off to a great opportunity. Where are you going? And I said, well, actually, I feel like my great opportunity is leaving. I think I've just had enough. I need a break. I'm going to go paint my house and have summer off and, just reset things and work out what those next steps are, not knowing that I would go into mortgage broking at that point.
You don't often get those moments in life where you don't have a job anymore. I think, we had 6 months when we moved back from the UK to New Zealand, and I just think back to that time. I was like, I had no responsibility at all. Do you still take long breaks and have that kind of R&R time?
I'm a huge fan of travel. It's been a challenging travel environment with certain viruses crossing the globe and lack of overseas flights. So I did a lot of travel, definitely. But yeah, not in the last few years. And obviously, having young children does change your ability to just take the suitcase and fly to Hawaii, etc. So there hasn't been as much travel in recent times. Also, I think the mortgage broker role can be quite all-encompassing. It's very much time-bound. You've got deadline after deadline, auctions, sale and purchase agreements that you just can't afford to drop those balls. It's not a good look to miss someone's settlement, and I've got a clean slate there, having not missed any settlements. And I'd rather retain that. So. I found it quite hard to go, hey, I'd go and take a month off. So I haven't done that as a mortgage broker. Last school holidays, we went down to Queenstown, and it was probably the first time since going out as an advisor that I really felt I could essentially forget about work for quite a good period of time. And that's through having built a good team where you've got trust and bringing in a couple of advisors that, I can now trust to look after things. So I found that quite liberating.
Okay. And you took that time off and you kind of painted the house and took a break, and then you got back into advising, you're working in another business. How did you get from that point to starting Advice Night?
Yeah, so painting the house, took those few months off, worked on the tan, felt quite relaxed, big weight off the shoulders. But then it was starting to think, what's next? And I really wasn't sure what was next, and started firing off the CV and trying a few different corporate roles, and not actually having a whole lot of success initially in terms of me thinking, oh, cool, I'll just walk into a much higher income. But then I was just approached off LinkedIn by an advisor who got in touch and was saying that they would really like to bring me in on the commercial lending side, having access to some funding lines and really keen on expanding their business into commercial lending. I was quite frank and said, actually, I left the bank because I wasn't really enjoying the commercial side so much, didn't find it that rewarding. But I'd be quite interested in looking at the residential mortgage side, thinking back to young 21-year-old me that quite enjoyed the more transactional basis, helping first home buyers get their first house, buying the first investment property, that side of things. And he straight away said, "Oh, we'd love to take you on as a mortgage broker. You can start straight away. I'll put a contract together, come in and let's have a chat about it." So I went in, and again, you're pretty naive, and perception again being in the bank, especially during those times earlier, we did look down upon mortgage advisors. So they weren't overly respected. A lot of people likened them to used car salespeople. Didn't really like a lot of the behaviours that they did see, and I think there was quite a few more cowboys that were operating in the space prior to some of the improvements that have come through from the regulation perspectives. I wouldn't say all of its improvements, and there's definitely a lot of onerous disimprovements that have occurred.
We're still in the transitional period, Malcolm.
We are. But no, it's been a challenging couple of years on that front, which we can discuss later. I went in, eyes wide open, got the contract, had a good chat, thought this looks really exciting, and then bounced it off my biggest mentor at the time was my mum, and so said, "Hey, thinking about doing this. What do you reckon?" And she said, "Oh, go and talk to this family friend that's been in that gig. We've known him for decades. Go and have a chat with him." So I did. He had a quick look and didn't really give it too much of a look, and just said, "We can do better than that. Come and work for me." And the inception training was really good. Initially a 7-day course, lots about techniques of interviewing clients, going through the fact finds and needs analysis. The final part of that course, they had some currently out of work Shortland Street actors that came in that you interviewed and got videoed interviewing them. So it's quite good steps. It kind of got you ready for it. And so no, it was good training. It was good.
I'm just imagining like Chris Warner coming up being like, "Yeah, I need some health insurance."
It wasn't Chris, unfortunately. They were lower tier. I think Chris is running the hospital now, isn't he?
He should be.
Yeah.
He's paid his dues.
Climb the ladder.
Yeah.
So no, it was really good in terms of the training side, and it was a complete new area for me because I hadn't been involved in those personal insurances. Honestly, 10 years working in banking, I'd never heard of trauma insurance. It's quite funny, you just don't really know. Stayed there for a year, and it was just a chance encounter at an Astron training event that I met Jonathan Michelle, who was the co-owner of Threefold. So we just got chatting, got along pretty well, and I think we thought in quite similar ways, and he was quite quick to offer me a role. Heard about what my contract was and said we can do a whole lot better than that.
I'm starting to see a trend.
Yeah.
We can do a whole lot better than that. Yeah.
Yes, exactly. And they did do a lot better. So I found it really fulfilling, helping first home buyers and imparting that knowledge and helping them get onto the property ladder. That bit I found is a real buzz, and I still do find as a real buzz. From going and having a portfolio where you're dealing with rich listers, helping them work a couple of slots up the rich list, and then being not particularly grateful for all of the work you put into it, to dealing with first home buyers that are just so happy and just saying, "Thank you. I thought it would never be possible. I didn't know we'd be able to buy a house." Them referring their friends, and you start to go, "Wow, this is quite cool." You're really making a difference, and you really are helping people. So I enjoyed that side of things. And then moving into Threefold didn't have a whole lot of experience there on the personal insurance side. So it was a real opportunity. We had a couple of really good mortgage writers within Threefold that were doing really good volume, that were just starting to pass me insurance lead after insurance lead. And it's really easy to write insurance when you've got people that are needing it. it's such an opportunity off the back of taking a big mortgage. You need to look at your income protection. You need to look at your health cover, etc. So it was quite a good way to start getting leads coming in with regularity, stopping feeling stressed about where your next paycheck's coming from, and at the same time building up my own business where I was focused on mortgages with my own clients, with having the other leads coming through to make sure that you've got food on the table. Just organically built from there.
Great. And then, so you're working under Threefold's brand, and then eventually because you were probably trading as Advice Night.
Correct. The entity Advice Night existed, trading as Threefold.
And then you went out and started Advice Night and built up your own brand. And how did you find that after making the move out?
Yeah, good. I mean, I was at Threefold for it was probably 5 or 6 years, and great place to again learn the graft, get established, build a book, and you had ownership of things like Trail within that model, so that was a bit of a de-risk in terms of taking that step. I probably stayed there a bit longer than I would have, but was thinking about potentially buying into that brand. Just made the call. I think the biggest driver of making the call was feeling like I had so much business coming in and didn't have enough support to help with it. So working really long hours, just doing consistent weekends, big hours, and thinking I actually need more support staff. I'm not getting that, and I'm waiting in a queue. So that was a big driver going, actually, if I go and do my own thing, instead of paying a portion of my commission to another brand, why don't I put that portion of commission into hiring a full-time support staff member? That will be my own dedicated resource. And then that will actually give me a better balance, which started to become quite important because I did become relatively successful at Threefold and, did get quite financially established through property as well. And it was more about how can I do this in a way that I can spend more time with the family, stop doing all that weekend work, give better client service, not go, hey, here's the deal, I need this written up, and then waiting a few days for that to go through the bottleneck in the pipeline, and actually having a dedicated resource where it's easy to prioritise work. So, the transaction works really well in that sense. Obviously, I buy the portion of Trail out that was owned by Threefold. But that gave me a really good Trail base as well, which de-risked the process of stepping away because that you've got good income coming in.
Good to have that option too.
Yes.
And so do you just kind of look at yourself in the mirror and say, I can do better than that, and then just start building up your own business and start bringing people in? How did that work?
It really wasn't my intent to actually start building, a bigger firm at all. The driver behind it was how can I have better balance? How can I make sure I'm giving really good service to clients, but also go and spend time doing exercise? How can I dust my golf clubs off again? How can I start finding time for the gym? How can I spend time with the kids on the weekend and just have a much better balance? And that did come because suddenly you're not paying a portion of your income, and you've got dedicated staff that are there to manage your workload. So it was easy to prioritise it. So in terms of growing the business, it really wasn't an intent, but some of that just came by way of coming up or meeting people that are keen to work with me. I've never hired to have a role. The people that are within my team are people that I've known that have talked to me, and then we've said, hey, there's an opportunity for us to work together. And it wasn't until the start of this year that I did actually bring 2 advisors in. So I've now got 2 mortgage brokers that work within Advice Night, a couple of really excellent guys that I think have got exceptionally bright futures within the industry, and being younger. I've really enjoyed that transition to a bit of mentoring, spending time with them, teaching them the ropes and what I know, but also I've learned from them. And I think, quite often mortgage broking is quite siloed and often a little bit, almost a little bit lonely in the sense that you stop getting the guidance and you're not getting necessarily feedback on how you can improve because you're just doing a process over and over again. You're going and seeing clients and you're having the same chats, and you probably go down the line of a similar pitter-patter. Obviously you alter it from situation to situation, but you're repeating your same process. When you bring in new advisors and then you start going and having client meetings with them, they add value because, you got a couple of smart guys there that add their own bits, and you go, I hadn't thought of that. it's been quite refreshing, and I really see value in doing those 2-person client meetings, and it's hopefully something that I'll continue doing, even as they become more experienced. I can see real merit in doing it. Yeah, more eyes, more insights.
It's so interesting because even when I think to like how I present like within my role, you bring somebody new in, they'll pick up on something that I've mentioned and just take it in a completely different direction. I'm like, I hadn't even thought about that. So the 2 younger guys you brought in, are they like, what's their experience? How did you kind of like get them involved in the company?
Yeah. So, I mean, Anthony Sage was most recently business development manager at ASB Bank. So he was looking after mortgage broker relationships at ASB. Prior to that, he was doing business banking at ASB. Before that, he was actually working in the mortgage broker space. So I came across him at Threefold initially. So he had a bit of a try at the mortgage broking side, and he made the decision to go into banking. Obviously, a bit more experience than when I'd first met him, and I was just so impressed when I did re-engage with Anthony when he came in to present to us on ASB's behalf. Just how personable and how professional he came across, and just the way he had developed. And I think he was getting to the point at ASB where they possibly didn't have enough resourcing in that BDM role. It was that tough time, triple CFA coming in. I think most of the calls that he was fielding from brokers were not necessarily happy calls. They were more like, my deal's been in the queue for 2 weeks. What's happening? What's going on there? And, having a couple of meetings with Anthony when he was at the bank, you just see his phone ringing nonstop.
Can you imagine? At that time, that would have been a real challenge doing that role.
Yeah.
Because there was just so many applications just going through all the banks, and I felt like there was a challenge with the applications sometimes being low quality, so it takes a long time for them to be processed, resources and staff. It's just like it's a complete cluster.
Correct. And that was my only criticism about the record profit that's just been announced that did get a lot of publicity in the media recently was I just wish they could have found a few more assessors during that time when we were battling with 2-week turnaround times. But yeah, such is life. They've improved the service game now, so we're ticking along okay with reasonable turnaround times. So again, just was so impressed with him, got chatting and thought, he'd be a cool guy that I'd love to work with. And I think that's a big part of it. Again, I never set out to go, right, let's make a company with X amount of staff. I don't want to be the next squirrel by any means. But if you're bringing in people that you enjoy the company of, you enjoy working with, you're going to learn from as well, then that's a positive for everyone.
So I guess for the new guys, it's just get out there, meeting people, a lot of touch points. How do you keep on top of all that communication when things are busy and you've got a lot of people coming through and inquiring? How do you do that so you're not working crazy hours? Have you figured that out, or is it still you're doing weekends?
I admit that up until 12 months ago, I was working very long hours and did find it really hard to switch off. It was hard. It's every holiday you're constantly taking phone calls and text messages and emails. It's to some degree been a bit of a relief this year having the market become a bit quieter because you can have a bit of better balance and you can feel like you're not letting people down. And I wouldn't say I did let people down, but again, when you've got a high level of perfectionism and you're seeing bad service, particularly coming from some of the service providers, you take that personally and you do feel like you are letting people down. So as much as you communicate, some of the outcomes that did come through were just, mind-boggling, and it was, some pretty hard conversations. How do you manage that workload? You've just got to do the hard yards, and it's, you are self-employed. There's no backup plan if you're not doing it. Obviously you surround yourself by good staff, and I think that's again been the strength of my business, that I've hired a couple of really well-experienced lending assessors that have come from that banking background. So they've done those loan assessment roles, so they know a deal inside out, and their ability is, they've got all the ability I have in terms of piecing a deal together and understanding a transaction. They've probably signed off more transactions than I ever signed off. So having an experienced pair of hands that you can pass stuff down to is really, really important, and I've been spoiled in that sense.
Because the communication part, I think even when I think I brought this up on the podcast before, but when my partner and I were buying a home, and it was right in the thick of when those turnaround times were quite long, and she was like, "What the hell's going on? It's been like 2 or 3 days." I'm like, just you wait,
They won't have even been keyed yet.
What a time to be alive.
I know. I know. Yeah. It was
fun.
frustrating. You're just kind of scratching your head going, could you not just hire a few more staff? And obviously they were nervous coming out of COVID as well. And they'd had their, they had an increased FTE and everyone was nervous. And, the start of COVID going, what's this going to mean for the housing market? Is the market going to collapse? So you can understand from a bank perspective, they don't want to go and pile on a whole lot of roles that they'd later have to make redundant as well.
Yeah, and it's also training as well, like getting people up to speed. That's like, you can't just magically hire people and they're like, boom, I can now assess your mortgage. You've got to like put someone through a training process as well. Yeah, it's just like anything bad, it's a combination of a few things going wrong that really exacerbate the situation. But hey, now the turnaround time's great. So
I also think when you got that tight labour market as well, and the banks sort of had periods where they wouldn't have been able to hire externally. So as soon as someone shows that they've got some nous and ability, whether that's in a branch or a lending assessor role, you're going to get the next department up the food chain, like whether that be business banking or commercial, that's going to go and look internally and they raid your stuff. And so, it's always kind of the funny thing in the bank, as soon as someone shows potential in front of customers in the branch, they're whipped away from customers. It almost seems backward. Oh, you're good at dealing with clients, so we'll hide you in the ivory tower and take you away from customers.
That happens in every single industry.
It does.
You're good with people, you're a top salesperson, or you're like good at XYZ, you're a good doctor. And I want to talk about how you got into that media landscape, because I've seen you at News Talk ZB, TV, NZ, all over. How did that come about, and how have you managed to keep up that momentum of being sort of in the spotlight?
Yeah, I guess part of that was kind of just coincidence through a friend of ours being on radio. So he used to host the George FM breakfast show, Clint Roberts, and he was a client of mine. And I just remember Clint rang out of the blue just saying, all of the feedback we're getting from young people is that it's impossible to buy a house in Auckland. Obviously it's not, because if it was, you wouldn't have a job. Could you come on our show and just do a bit of a set? You helped us get into our house. Could you come on the radio and explain how it is possible? And we came up with a scenario. We looked at one of the DJs at George FM, Benny Boy, and took the scenario of what he'd need to do to actually get on the ladder. And I'll be completely honest, I was really nervous about going on air. Like, I'd never done anything like that. I hadn't even called Talkback before.
long time listener, first time caller.
Correct. And so you're thrust into it. But it went really well. Got a heap of positive feedback. And Clint rang up the next day and just said, hey, we got so many text messages. It was really, really good. Would it be something you'd be interested in doing weekly? And back of my brain's going, oh, it was really stressful for me. I probably won't sleep the night before. And then front of the brain's going, what an opportunity to get more business, build your profile. You've got to do it. You'd be stupid to say no. And so I'm like, oh, yeah, I could be interested in that. And he goes, well, obviously on radio, we need to drive advertising revenue. So, would you consider it if we did a weekly slot and the charge will be X dollars? I said, what about Y dollars? The negotiation broker side of me clicking in going, oh, can we get a bit of a discount here? And he basically just straight away said, yep, that's fine. I'm like, damn it, why didn't I say less?
You never know that might have been under what they were expecting. They're like, just whatever, let's just do it. Because it's also, you're giving a lot of value back to them through that conversation.
It was a good fair charge, and it wasn't onerous, and Threefold paid 50% of that. So it was an opportunity to go on every week and embarrass myself on air to the masses. And actually, built quite a good profile from it. And it's amazing how many people actually listen to that show, and you still get people contacting saying, hey, I listen to you regularly on George. And like, you haven't been on there for about, 4 years. But
wow. You think about like the stereotype as what like a George FM listener, who I don't know what it'd be like, 18 to 35 male, probably the demographic, what they'd envision as a financial advisor, and then I guess like you coming on and talking on like a dance music radio station.
Yeah.
It's so far outside like what they'd expect. And I guess making it accessible to them, it can be a really important thing. 'Cause a lot of people I felt at that same point a bit disillusioned about buying a home.
Correct. And yeah, you're right in terms of the demographic not necessarily going and seeking out financial advice, and they're not necessarily going to be listening to the News Talk ZBs and looking for their grunty advice. So we tried to keep it quite short and sharp and make it a bit of fun. Yeah, the intro song.
Intro song?
Oh, it was good. Yeah. Yeah.
Do you remember it?
Not offhand. I'm not going to sing online, but we can look it up for you. It was good, actually.
I'll try and find it.
Yeah, I should make it my ringtone. And, people were texting questions. You try to make it a bit of fun. And, you obviously had to be careful in terms of providing specific financial advice. And half the questions were always, shall I be buying Ethereum or Bitcoin? And you're like, oh. Yeah. I've got $5,000. What should I invest in? A lot of questions like that. So I'd always try and bring it back saying, hey, if you're trying to get on the property ladder, come and talk to us. We'll build a plan for you. We won't charge you for the process of doing so. It's not as hard as it may look. Just start the process and set some goals. I did get some good leads from that. And then as a result of that, I got contacted by News Talk ZB, who said, hey, could you come on our Weekend Collective show, which is weekend afternoons, and we'll pay you for it. I was like, oh, that's even better. Rather than me paying for advertising, I get paid to go and do it. So leaped at that opportunity, and then you just get other opportunities because you're in amongst it. You meet a lot of people that are involved in the industry. A lot of the people in the industry have become clients because you meet them through that process. So you get referred within the media works and the NZME, and then you get approached for potential articles and stories. Yeah.
Man, I love that. Did you find there was any conflict of interest, I guess, doing like for one station going to another? Did they find that weird, or they were happy with it? Or?
No. So, I'd finished my tenure on the breakfast one that I was paying for. And so no, there wasn't really any overlap there. And it's just a pretty casual basis as a contractor, occasionally going in and doing a slot. Yeah.
Great.
Yeah.
And what's next? Do you have any other things in the pipeline, or?
I should really do podcasts. I hear they're pretty entertaining. And
not worth it.
No one watches them anyway. I think there's possibly merit in it. It just comes down to the time of the day as well. And like by the time you've answered your emails, you've answered your phone that doesn't stop ringing, you've tried to spend some time with the family, you're trying to fit a bit of exercise. It does take discipline just to go, right, we need to do some more stuff. Young kids as well. We've got a 5-year-old and a 3-year-old. My wife is excellent on the marketing side, and she's got some real skills. She's built our website. She's helped put things like newsletters and stuff together like that. So I know she's got a lot of scope. We are going to try some videos, I think, and just see if that gets some traction. Again, I've been lucky that I haven't need to really go and ask for business for a good period of time. But now having young advisors in, you do feel that you need to pull some levers to bring some leads in to get them stuck in. So, I found my first year as an advisor, like you haven't got any pipeline, so you've got a lot of time. So you kind of sitting there at your desk and you're like, right, I haven't got anything really to work on. I need someone to come and talk to me. I'm ready to go. I've got all the knowledge. How do I make someone come and talk to me about buying a house? And it just takes time in the saddle, but once you've done a whole bunch of first home buyers, I reckon they become your best advocates. And first home buyers will go and tell 5 or 10 people. I've got clients that say that they refer me weekly. So it's really flattering when you get that kind of feedback. And so because you've got a whole lot of people that are referring, you've just got that organic lead generation. You've done a good job by someone. They refer their brother or they refer their sister. And it's always referred business that is your best business because it's completely pre-sold. If you've done a good job with someone's sister and they've said, you got to talk to him, he really looked after me, you've got this instant trust. So it's a really easy, you can almost short circuit a lot of the requirement for proving yourself. You're straight into the transactional side and you'd be quite efficient and you're not nervous you're going to lose that lead.
Because it's pretty warm coming in. Do you ask for referrals?
I don't make a set method to do it, but they just seem to come. I possibly could think about it. And we have thought about, is it something we should mention in a newsletter? But they seem to come. And again, I don't think you need to be a pushy salesperson by any means. I think just being sincere, doing a good job with people, they will naturally want to recommend you if you have done a good job by them. So you don't necessarily need to take it to that step to request.
Yeah. Nice. And for the new guys, not to say they're like twiddling their thumbs, but like at the moment it is a bit quieter. Do you want to discuss like remuneration? Like how do you
Yeah,
keep
so
their head above water if they're new advisors?
I've been reasonably generous and put them on a retainer. So we'll give them at least 12 months income smoothing. We're paying them enough to make sure that no one's going to starve in the process. And then we'll address that and work out what the next steps are. I mean, both have had fairly busy years. Both have been married this year. Both have had honeymoons this year. So, they've had a lot of other distractions and focuses that they've got to have as well. In fact, Anthony's just back from his honeymoon, I think, yesterday. So should be hitting the ground running today.
Yeah, he'll be ready to go, won't he?
Yeah, that's right. That's right. And they should both be quite hungry because, they'll have families to consider in the future. So, I mean, they're both motivated, hungry kind of people. So I feel relaxed paying a retainer and then having a commission component on top of that.
Great. No, it's good to know because I know that think about it, those advisors that have joined the last year, they've probably seen it just like slow right down. And it could be, I think, nervous times for a few people.
I think it would be. And I mean, so many of those big firms that have got the salary basis and require a big volume of business to pay the overheads in the big offices, they will need to look at their cost base because certainly the revenue will be coming down quite rapidly, particularly if they're taking debt in the business as well, which will be repricing. We've kept things fairly lean. Again, as I've talked about before, trail's been an important part of our business. So I feel quite relaxed that we've got enough money coming in the door to cover all of the overhead without being stressed about it.
Okay, so getting that trail commission built up to help cover the overheads, crucial.
It just de-risks your business. When there's enough coming in that's going to cover your salaries and, again, make sure that your mortgage has been paid and there's food on the table, then it takes a whole lot of the stress off. You're not scratching around going, I need to do X amount or things are dire. Trail has been a big part of it. So I think, a lot of the businesses that have chased the higher up fronts will now be really feeling that pinch because they haven't got that ongoing commission as their volume of transactions drops. Whereas if you'd gone down more on the trail route, you're quite de-risked and you're not as focused on the next transaction to make sure you've got funds coming in the door.
And so in terms of the types of advice you offer, you do mortgages, KiwiSaver, and you refer the risk out, right?
Yeah, and I have to say the decision to refer the risk has just been one of the most liberating experiences of my life. And I was a big advocate of the, one-stop shop will do everything for you. I learned quite quickly at Threefold that I was getting a better sales conversion when I was selling risk to the other mortgage brokers' clients. And I think the big driver behind that was they were the experts helping someone in a house. And then they just position it saying, hey, you have to talk to Malcolm. He's the expert on personal insurances. Then you're coming in fresh and they're going, cool, here's someone that really knows his stuff. Who's the insurance guy. We'll listen to him. And it's just someone fresh. I call it deal fatigue or client fatigue, where if you're dealing with a first home buyer, it can be a 12 or 24-month period where you've dealt with them for quite a long time. You've rolled over renewals. You've talked to them so much. By the time they've bought the house, you've probably had almost enough of meetings
sick
and
of
chats.
seeing your name pop
they're
up.
Sick of you and you're sick of them. And bringing in someone fresh that just reinvigorates it, I think is really positive. So if you've got a really good insurance advisor that's then going in and going, hey, congratulations on the house. We need to really cover your risk. It's more genuine, I feel, and you're going, hey, whilst you're buying this, I'll also sell you this. And so I really did find I was getting that better conversion selling on their closed mortgages than I was on my own mortgage clients.
Mate, it's been so good going through. I feel like you've had a really interesting journey. Not just like bang to an advisor. You've like really gone through and experienced a lot of different businesses and the way you give your advice, covering mortgages, insurance, KiwiSaver. I really love the media stuff that you do too, and it looks like you've built up a good foundation for a solid business. So looking forward to seeing what you're doing next.
Great.
Even got that top 25 advisor award too. So next year, top 10.
I don't know about that because, again, when you're handing leads out, they don't go under you. So it's probably going to diminish the results. But, I don't chase rewards like that. It's, what's important to me is just continuing to give good service. And that's what I really like. If you look after your clients, they'll look after you and your business will be future-proof.
Rest to look after itself. Thanks so much, man.
My
really
pleasure.
enjoyed that, Malcolm. Cheers.
Thanks so much.